Hello, everyone. This is Mallory Caldarella from Samba's management team, and I will be your host for tonight's webinar. Thank you for joining us this evening to discuss the financial implications of COVID-19 for the ambulatory anesthesiologist, including updates around the CARES Act, CMS, Hospitals Without Walls Declaration, and more. Let's start with Samba's legal disclaimer, which you will see shared on the screen right now. While you read through this, I would like to mention a few quick housekeeping notes before I pass things over to Samba's president and tonight's moderator. As you will see, each of you have a control panel that can be found in the upper right hand of your computer screen. Please note that this webinar is in listen-only mode. We do encourage you to submit your questions in the question box throughout the duration of the webinar. You can type in a question or comment and submit it at any time throughout the presentation. We will have time at the very end for Q&A after the presentation is over. If you experience any technical difficulties throughout the webinar, please submit a chat within the chat box. Our staff will monitor this and assist when necessary. I would now like to hand things over to Samba's president, Bassem Abdulmalik, so that he can introduce us to the speakers and panelists.
Thanks, Mallory. I appreciate that. Thank you all for joining us today. For those who do not know me, my name is Bassem Abdulmalik. I'm an anesthesiologist at Cleveland Clinic in Cleveland, Ohio, and currently Samba president. So next slide, please. So before we start, I just wanted to remind you all, if you're not a current Samba member, I would like to welcome you and invite you to join us. If you go to our website at www.sambahq.org, you will be able to see all the benefits that all our members enjoy and share. Also, next slide, please. I would like to share with you that the Samba leadership has also established an online resource page. Next slide, please. A COVID-19 resource page. That page contains a lot of resources for you. It's actually open access. It's not only limited to Samba members, so you can use it and also share it freely and widely. We wanted to help our colleagues all over the world with these resources. Those resources include a web page dedicated to COVID links, as well as reference articles. There's also an open discussion forum that you can join and allow for engagement. We hope that you can visit that forum and share some of your thoughts, strategies, approaches, best practices during this time that we're all going through. It's also a way to ask questions for Samba experts to be able to help out and answer those for you. On that website, you will find a library of COVID-19 webinars. Last webinar is there, the video as well as the slides. And tonight's webinar is also recorded and will be posted early next week along with the slides. I'm joined tonight by two speakers and three panelists. Two speakers, Bill Prentice, CEO of Ambulatory Surgery Center Association, well known as ASCA, as well as Julio Davila Cipe at Davila Advisory, LLC. Next slide, please. The three panelists we have, Sharon Merrick, Director of Payment and Practice Management at the American Society of Anesthesiologists, Nora Maris, Director of Congressional and Political Affairs at the American Society of Anesthesiologists, as well as Tim Roos, who is the Vice President of Client Business Services at Abio Corporation. As you could see, this webinar is a true collaboration between the three organizations, the ASA, ASCA, as well as Samba. Also, we have the Abio Corporation and Davila Advisory, LLC from the private sector. So I would like to take a minute to recognize and thank all our speakers and panelists for their time and willingness to help us out during this difficult time that we're all going through together. Without any further ado, I would like to introduce you to our first speaker, Bill Prentice, the CEO of ASCA. Bill?
Thank you, Bassem. I appreciate the opportunity to spend a few minutes with you and your webinar attendees. Unfortunately, my webcam is not working. That's bad for me, but good for you. You don't have to look at me. You can just listen. One, I want to start by hoping that everyone on this call is healthy and that your families and colleagues are doing well during the pandemic. It's obviously an extraordinarily difficult time for the country and the world, and I appreciate you coming onto this webinar to hear a little bit about what ASCA and SAMBA and ASA are doing to help you navigate through this. Looking at it from the surgery center perspective, I think where this really hit home for us was the guidance on restricting elective procedures that came out soon after the pandemic was announced. And that came from a variety of sources, including ASCA. We developed our own guidance, as well as the American College of Surgeons, other specialty societies, and then the federal government through CMS and many state governments mirrored those guidances. And that has obviously resulted in a lot of economic stress for surgery centers and those of you who practice there. The guidance make obviously complete sense when you think about the two twin goals of trying to preserve PPE for hospitals that are dealing in a surge capacity with COVID-19 patients. And then obviously also to employ the social distancing that we're all going through right now in terms to try and minimize the likelihood of a spread of COVID-19. That said, we know that these guidances allow for clinical judgment to be employed for necessary surgery. And one of the things that we were very careful to explain to policymakers was while all the procedures we do are elective, some of them are urgent and necessary and still need to be provided, even during the pandemic. You're still seeing obviously a limited number of those types of surgeries taking place in your hospitals and in some surgery centers. But clearly, the business is down, anywhere from 60, 70 to 100% in many surgery centers right now, who are following these guidance. One of the things that we knew, though, as this guidance was being implemented, was that the federal government was looking at surgery centers and other settings of care as potential sites to help deal with the surge in patients that would be leaving the hospital in order that the hospital could take care of COVID-19 patients. So we were, consulting with CMS, the Centers for Medicare and Medicaid Services, on how that should happen. And what ended up being released was, as Bassem referred to it, is the CMS Hospital Without Walls regulatory waivers. And essentially, the purpose of that program was to create the broadest possible waiver so that surgery centers and other sites of care could be used in new ways to help treat patients during the pandemic. And the two central ways that would apply to surgery centers is that surgery centers have the option right now of enrolling as hospitals in Part A and being able to perform the type of procedures normally limited only to an inpatient hospital. That also means, of course, that ASCs could be doing the types of procedures that are performed outpatient, but only in the hospital outpatient department. So it really creates a lot of flexibility so that necessary care can continue to be provided in a safe, clean setting, with a lower risk of transmission of COVID-19, and then freeing up hospital resources to deal with the pandemic. And, we are seeing that happen in hotspots like New York. Obviously, in most parts of the country, we have not seen that type of surge capacity issue occur in the hospitals, which has put us in a particularly difficult spot because, the hospitals are, have capacity. ASCs are still following these guidance to limit elective surgery, but it's not being replaced with any type of care or income coming into the surgery center. So it is creating, a lot of economic distress in the ASC community, And we've obviously been looking for ways to mitigate that through some of the government programs that were enacted over the past couple of weeks as part of the CARES Act. And I know our next speaker, Julio, is going to go into some detail on some of those programs, but I'll mention them in sort of a broad way and let him obviously go into the details. There were obviously some loan programs that were created as part of the CARES Act to provide assistance to small businesses. And ASCs, by and large, fall into the current definition of small business used by the Small Business Administration and the Treasury Department. However, we have a concern and a problem, which is that many surgery centers are in joint venture with a management company or are in joint venture with their local hospital. And the current rules that SBA uses to determine whether or not you are affiliated with a larger organization like a hospital or a management company currently preclude those surgery centers from accessing these loans, particularly the payroll protection program loans. So we are not able to access that lifeline of financial support right now. It's something that we're actually looking to address. We have asked the Treasury Department to see if they have the regulatory flexibility to change their rule so that we can access those loans. If that's not possible, we know that Congress is going to be appropriating additional funding for those loan programs, potentially as soon as later this week, if some negotiations work out between the Republicans and the Democrats. And so another avenue for us would be to try and get some legislative change that would permit or require SBA to allow those loans to be available to surgery centers that currently can't get them because of those joint venture arrangements. The other very recent, program that was able to benefit surgery centers was released on Friday, which is another element of the CARES Act, was the creation of a $100 billion grant fund available to the healthcare system to deal with obviously frontline providers that are dealing with the COVID-19 pandemic, as well as the many healthcare providers that have been economically harmed by following guidance not to see patients and to postpone care that could be postponed for weeks or months. That first $30 billion of that $100 billion was released on Friday to all Medicare providers, and it's based on a formula according to what your Medicare fee-for-service revenue was in 2019. So they looked back at the amount of Medicare revenue each Medicare provider received for fee-for-service, only fee-for-service. It doesn't include Medicare Advantage, doesn't include Medicaid, but fee-for-service Medicare, and it's about roughly 6.2% of that annual revenue was given to each Medicare provider as a grant. And so if you had an ACH account, that money was just direct deposited into your account either Friday or today. I hear there's been a few glitches in the system. So if some of you received that funding and it disappeared, I hear it'll be back in your account again tomorrow. But you can imagine creating a program of this scale and implementing it this quickly that there would be some kind of glitches. There's still $70 billion left in that initial grant fund that will be released in the next week or two. Our understanding is that most of that funding will be going to direct line COVID-19 support, so predominantly to the hospitals. Some will be going to Medicaid providers, and some will be going to pay for the actual COVID-19 healthcare expenses for people who are currently uninsured. So, that's to come. We again know, much like that SBA fund, that revenue will quickly be spent and be spent well before the pandemic recedes into a distant memory. So we know that Congress is already working on its next legislative package, the next version of the CARES Act. that will obviously replenish some of these funds, but also, since it's not being drafted in quite the haste of the initial CARES Act, we'll probably have some maybe tighter rules and different elements to it that I'm sure all of us will be looking to try and shape to make sure that it works for the healthcare system, it works for each provider group, it works for patients, and it helps us to get through this pandemic. From our perspective, one of the things that we would like to see is, rather than just have one big pool of money available to all healthcare providers like we currently have with this $100 billion fund, would maybe have a separate segregated pot of funding available to non-hospital groups like surgery centers, like physician practices, that would allow those settings to apply for loans, hopefully at low or no interest, to make sure that they have the liquidity that we need in order to remain open and in order to be able to provide all the care that we know we're postponing. One of the concerns that I'm sure you have, and that certainly our surgery centers have, is by closing up, by giving away their PPE, by potentially loaning out their anesthesia equipment to a hospital, that once the pandemic wanes and we're expected to get back to work doing our traditional cases, that we may be ill-equipped. So one of the things that we're going to need is a certain amount of capital and liquidity now to make sure that we're positioned to be able to not only just help during the pandemic in whatever way possible through the Hospital Without Walls proposal, but also to be able to get back and do our traditional core business once the pandemic is over. And so the last thing I'll mention, then I'll turn it back over to Bassem, is that one of the other things that we now need to start looking at is, what is that next guidance going to look like to help us transition from the current postponement of all elective procedures to slowly get back into the business of doing care that we know needs to be done. Unlike the initial guidance, which was essentially a light switch turning all elective procedures off, we can't expect that that's the way we're going to get them turned back on. That it's going to be a much more gradual process based upon where the spread of COVID-19 is or isn't, and what kind of availability of PPE and proper social distancing safeguards we can put in to allow some surgery to move back into the outpatient space, whether in the hospital or in the surgery center, while we're still transitioning out of the pandemic. There's a lot to that. We obviously expect that those initial decisions about how to develop that type of guidance has to come from the clinical community. So we're reaching out to the specialty societies, the College of Surgeons that issued the initial guidance, and to ask that they start thinking about the best path forward so that we can eventually get cases back into surgery centers, particularly those that are really front of line and need to be performed sooner rather than later. So I think that's obviously not going to be an easy thing to decide, but it's something we have to start now, and something that I'd hope in the next couple of weeks we might have some sense of what that guidance would be, and it's in a guidance that is understandable both to the federal policymakers and state policymakers, that they could implement to help make sure that we can all start providing the care that we know we need to out there while we're transitioning out of the pandemic. So Bassem, I think I'll stop there and turn it back over to you.
Thank you very much, Bill. I appreciate this informative talk. And we're with you on that. We're also, our members are all ready to get back to work and take care of our patients. And down the same lines at SAMHSA, we are thinking also in the same considerations. And one of the questions that comes to us is how we're going to go back to work, and how is COVID going to impact what we do. For example, we have a lot of questions about the virus, how long it would stay in the body after it infects somebody, and when would we consider somebody recovered, when somebody would be immune or not at all, and what kind of testing we're going to do, and how we're going to look at those patients. Let's say somebody who survived COVID in an ICU and now requiring some surgery at Ambulatory Surgery Center. Would we accept them or not, and what else we need to look at? So we're going to try to answer some of these questions at the next week's webinar. So please, for all our attendees, mark your calendar next Monday, 8 p.m. We have two distinguished speakers, infectious disease specialists and intensivist as well, who are going to be answering some of these questions and guide us through this process. So thanks again for your presentation. Now we'll turn the podium, if you will, or the webinar to our second speaker, Julio Davila, who has the slides and walk us through the details of how to navigate through all these regulations and that Bill shared with us. Julio?
Yes, hello, thanks, Boston. So hello, and thank you guys for joining us. I'm going to do a quick recap of the CARES Act and its impact. There is a lot to go over, so I'll move fairly quickly through the slides. And I'm sure you can't wait to get into it, so let's get started. My objective for the presentation is to give an overview of the following items. All but the Family's First Coronavirus Response Act came into effect by the CARES Act. The majority of the conversation will cover the Paycheck Protection Plan and economic injury disaster loans. That will be followed by a quick overview of the Employee Retention Credit, the changes of unemployment benefits, the Family's First Coronavirus Response Act, and then a quick summary of some tax changes put into effect by the CARES Act. So quickly, of the $2 trillion stimulus package, the Paycheck Protection Plan, or PPP, and economic injury disaster loans are probably the areas that have received the most attention from the media and business owners across the country. Over the next few minutes, I will be getting into the workings of the PPP, as well as changes made to the economic injury disaster loan program that opened up its availability. The Paycheck Protection Plan basically authorized the Small Business Administration to guarantee $349 billion in forgivable loans to help small business cover payroll expenses and other expenses while our economy is essentially locked down. While the funds can be used to cover other expenses, the intention of the plan was to maintain high employment throughout the economy. So as we'll see, a lot of the provisions and restrictions of the loans are tied to payroll costs. This slide shows the terms of the loans. They are the same for all borrowers. As you can see, the terms are very friendly to the borrowers. It's just a 1% interest rate. There are no personal guarantees or collateral needed. No payments need to be made on the loans for 6 months. And the loan is, assuming you meet certain requirements, 100% forgivable with no need to pick up any cancellation of debt income. Okay, so who is eligible? Affiliation rules notwithstanding, to be eligible for the loan, you need to be a business with fewer than 500 employees, with some exceptions for businesses with more than 500 employees. Before the CARES Act, an ASC with over $16 million in revenue would not be considered a small business in the eyes of the SBA. With the PPP, however, as long as there are fewer than 500 employees, it should be eligible. Additionally, the business must have been in operation before February 15th and had employees and or independent contractors. Also, sole proprietors and independent contractors are eligible to apply for this loan. So how do you get one? While these loans are guaranteed by the SBA, the loans are obtained through an authorized SBA lender and not the SBA itself. So to get one, you must look to your local bank or whichever bank you have a working relationship with. So what you need, well, for one thing you will need for sure is your Form 2483, and that is the actual application for the loan. In terms of documentation, there is no standard set of documents. Each bank is coming up with their own documentation requirements. Remember, this program didn't exist a couple of weeks ago, so banks just did not have a process to deal with this. That being said, if you intend to apply for a PPP loan, I would suggest gathering all your payroll tax filings and records. The maximum loan amount is tied to payroll, so you'll probably be asked to provide at least some of these documents. If you were a small business, you could have started applying as of April 3rd, and independent contractors could begin submitting applications starting this past Friday, April the 10th. The maximum loan amount you could obtain through the PPP is the lesser of 2.5 times your payroll cost, or $10 million. So what's included in payroll costs? In addition to wages, the payroll costs, you can include employee benefits, such as health insurance or retirement benefits. However, you can only include a max of $100,000 in salary per employee. So for example, if you have an employee that makes $250,000 a year, you can only count $100,000 of that salary to get to your max loan amount. These are the employee-related payroll costs. Now let's look at costs as they relate to business owners. If you're a shareholder of a corporation, a C or S Corp, you can only include shareholder wages up to that $100,000 cap into the calculation of payroll. Any income from distributions or dividends would not be considered a payroll cost. If your business is taxed as a partnership, in other words, you file a 1065, things are not quite as clear. Any W-2 wages received by partners will count towards payroll costs. The one area where guidance is silent is with regards to guaranteed payments and distributive share of income. As there's no official word on this, we're just kind of left to speculate. Some people argue that these should count as payroll, while others argue that it shouldn't. Personally, I'm in the camp that these should count as a payroll cost, as income is subject to self-employment, and it would fall in line with what is allowable for self-employed individuals. Again, this is my opinion, so you may want to check with your tax advisors to what makes sense for your situation. If you're self-employed or an independent contractor, whether you file a Schedule C on your personal tax return, income, wages, and other earnings from self-employment will count. As with all other areas, that is also capped at $100,000 in total compensation per yourself. So let's look at a couple of examples. These examples are straight from the SBA's FAQs. At the end of the presentation, I included a link to the FAQs, as I found them to be very helpful in clearing up many questions. In the first example, we're assuming that no employee makes over $100,000 a year. Here, annual payroll is $120,000, so monthly payroll is $10,000 times 2.5 gives you a max loan amount of $25,000. The second example assumes that some employees make more than $100,000 a year. In this example, total payroll is $1.5 million. After subtracting any excess salary over $100,000, we get annual payroll of $1.2 million. That comes out to $100,000 a month in payroll. Multiply that by 2.5, and you get a max loan amount of $250,000. Now, I realized I went through that pretty quickly, so I wanted to give you a link to a loan calculator put together by the AICPA, the American Institute of Certified Public Accountants. The folks over there were kind enough to build an Excel spreadsheet where you can input your information and it will calculate the max loan amount for you. Okay, so got the application filled out, everything's approved, and get the money. What can we spend it on? As we talked about at the very beginning, the loan can be used to cover payroll costs as well as other costs. However, payroll costs must make up 75% of the PPP loan proceeds. The other 25% can be used to cover mortgage interest. Principal payments do not count, by the way. Rent, utilities, and any other interest for debt acquired before February 15th. As payroll costs need to make up 75% of the expenses, let's quickly go over some expenses that have been specifically identified as not being considered payroll costs. If you have an employee who does not live in the United States, then their compensation will not be counted towards payroll costs. As I mentioned a few times, you cannot count more than $100,000 in compensation for any individual employee. Federal employment taxes do not count as payroll costs. Leave wages allowed through the Family's First Coronavirus Response Act. I will talk about this in a bit more detail later, but in short, employers get a credit for any leave paid under this act, and as they get a credit for these wages, they are then not allowed to be included as payroll costs. That would be double dipping. And finally, any payments to independent contractors are not considered payroll costs. The assumption is that the independent contractors will apply for their own loans, so they are included from these calculations. Assuming you meet the use requirements, the funds, you are then eligible to have the loan forgiven. The amount forgiven will depend on two things. First, the loan proceeds must have been spent on approved uses over an 8-week period, with 75% of the proceeds used to cover payroll costs. And additionally, you must have maintained the number of employees and pay levels. Remember, the goal of the Paycheck Protection Plan was to keep people employed. To this end, they tied loan forgiveness to maintenance of employee levels. So what does that look like? The forgiven amount of the PPP loan will be reduced if the total employee headcount and pay is reduced for employees that make less than $100,000. The amount reduced is, it's based on a formula. It's a ratio based on the number retained over the covered 8 weeks to the number of employees the business would ordinarily have. The Act does allow for businesses to cure any reductions made during February 15th through April 26th. If, for example, a business owner reacted to the shutdowns by eliminating a significant portion of his or her workforce, then there is an opportunity to get to full-time employment by June 30th. Now, the employer does not have to hire the exact same employees. They can be full-time equivalent employees. The CARES Act also created an emergency advance of up to $10,000 through the SBA's Economic Injury Disaster Loan Program. The Act only says up to $10,000 without specifying how they're going to determine who gets $10,000. I have seen some speculation that it'll be based on number of employees, but I have not seen anything official. So for now, let's just stick with it's going to be up to $10,000. The advance will not have to be repaid whether or not you approve for this loan. The Economic Injury Loan Program is a program that's been around for a long time, and it becomes available generally with people who are in declared disaster areas for situations like severe storms and earthquakes and the like. On March 13th, the U.S. was essentially declared a disaster area, so it became available to small businesses everywhere. These loans can be for up to $2 million, and they carry a 3.75% interest rate. The term of the loan is determined on a case-by-case basis, but it's maxed out at 30 years. Unlike the PPP loan, this loan is attained via the SBA, and you can get their loan through an application they have online. If you already received an advance and use it for payroll expenses, the advance will just simply be refinanced into your PPP loan. Otherwise, it will not affect your PPP loan at all. Now, the term refinance can be confusing. So here are the same examples from before. Only now it takes into account an outstanding economic injury advance of $10,000. In interest of time, I'm not going to go through each example, but what ends up happening is that the PPP max loan just goes up by the amount of the advance. Before moving on to the next topic, I would like to take a moment to emphasize how important it will be to track the use of any funds obtained through the Paycheck Protection Program. The loans will not be automatically forgiven. You must request loan forgiveness. So it is critical that you maintain a set of records clearly detailing the use of these funds. You may want to open a bank account in order to hold these funds separately, or add a line item to your chart of accounts to track these expenses. Do whatever makes sense for the systems that you already have in place. Okay, moving on from the Paycheck Protection Program, the CARES Act also put into place the Employee Retention Credit. This is another attempt at encouraging businesses to maintain full-time employment during this crisis. The Employment Retention Credit is a fully refundable tax credit for employers equal to 50% of wages or similar compensation to any employees between March 13th and December 31st of 2020. The maximum credit is $5,000 per employee, which is equivalent to $10,000 in wages for the entire year. The eligibility requirements for this credit are different than those for the PPP loan. To qualify, the business must have been significantly affected by restrictions imposed by government authorities, such as the shelter-in-place rules, and additionally experience a significant decline in gross receipts. Significant decline is defined as having gross receipts less than half of what they were in the same calendar quarter as the year before. Self-employed individuals are not eligible for this credit, and you cannot get both the PPP loan and qualify for this credit. Clearly, if you can get the PPP loan, it is a much better deal than this credit. But if for whatever reason you can't, this is a benefit that you should capitalize on. So how do you get this credit? You get immediate access to the credit by reducing your federal tax deposits that you normally make after every payroll. Remember, there's a refundable tax credit, so if the amount of the credit is greater than the total federal tax deposits that need to be made, the employer can file, it's a brand new form, 7200 with the IRS, to get an advance on the refundable portion of the taxes if necessary. The next item on the agenda is a pandemic unemployment assistance. This provision made unemployment benefits available to individuals who are not already eligible if they're unable to work because of COVID-19. The federal supplemental benefits include an additional $600 a week to the state benefits and also extends benefits 13 weeks beyond the state's current law. The unemployment assistance also extended benefits to self-employed individuals and independent contractors. However, states have been struggling with how to implement these benefits. Unemployment benefits are handled at the state level, so the process is vary widely. So if you are self-employed and looking to file for unemployment, the process will really depend on where you live. For example, as of today, Missouri is still trying to figure out how they will roll this program out. I believe Ohio is also working on it. I know some states like Michigan, I believe already have a way to apply for these benefits online. I recommend that you check with your state unemployment commission to see what needs to be done. The good news is that when approved, the states will make up any missed unemployment benefits due to these delays. The final topic that I wanted to address before providing a quick summary of the tax changes is the Families First Coronavirus Response Act. I have referenced this a few times tonight, and while this is not a part of the CARES Act, I thought it important to bring to your attention. This was signed into law on March 13th. This act requires employers with fewer than 500 employees to provide sick leave benefits to employees who are directly impacted by the coronavirus. And there's a specific set of requirements and conditions that need to be met, namely the employee contracted the virus or he's suspected of having contracted the virus, so he has to be quarantined. So assuming those conditions are met, with regards to sick leave act, the employer is required to pay 80 hours full pay to the employee up to $511 a day. If they are directly affected by it, or 2/3 of regular pay up to $200 a day if they cannot work because a family member is directly affected by the virus. The family and medical leave requires employers to provide an additional 12 weeks of leave at 2/3 regular pay. The employer can receive a fully refundable tax credit through their payroll taxes for any wages paid for this as a result of this act. And frankly, to cover the ins and outs of this would be at least a few hours. So there is a lot left unsaid here. However, if you have employees on leave because they've contracted the virus or some other related reasons, just be aware that you may be required to pay these benefits. Finally, I would be remiss if I did not at least provide a list of some of the tax changes that the Tax Care Act brought about. First, there's the widely publicized $1,200 rebate for individuals with an adjusted gross income of less than $75,000 a year. And if you're married filing joint, you get it below $150,000 a year. However, this does phase out. If you're single, if you have no children, it phases out at about $100,000 a year. And if you're married filing joint, if your AGA is about $200,000 a year, it would be completely phased out. Next, the 10% early distribution penalty from IRAs is being waived. RMDs are waived for 2020 as well. On your 2020 return, there will be an above-the-line charitable deduction of up to $300 for those that take the standard deduction. Also, there's been for a while the $5,250 exclusion of employer assistance, education assistance to help pay for tuition for employees. Well, now that can also be used to pay off student debt. So that could be a big benefit to some employees who are, struggling with their student debt payments to get that $5,000 without having to pick it up as income. And finally, there was a correction for the depreciation of qualified improvement property. There was an oversight during the Tax Cut and Jobs Act that ended up making qualified improvement property depreciable over 39 years. The correction they made now made the qualified property eligible for bonus depreciation. So if you were negatively affected by this, you may want to amend some returns to get this deduction. Okay, so these slides will be made available to everybody. So I wanted to include some links to some additional resources. The websites on the screen and FAQs are a great place to look up any guidance on the topics covered here tonight. Alternatively, feel free to contact me at the email on the screen. I know that was a lot, and I tried to cover as much as I could in the time that I had. And I would like to thank you so much for your time, and I hope that you found this information helpful. Thanks.
Thank you very much, Julio, for your very informative presentation. And I would like to invite all the speakers and panelists to join in and turn your cameras and phones on, please. Thank you all. Appreciate it. So now we're going to start with the first question. Mallory, would you mind sharing the question that you received, please?
Yeah, absolutely. So we had someone submit in ahead of time, which thank you to everyone who has submitted questions. We really appreciate it. Someone asked us to speak specifically to those employed exclusively in office-based anesthesia practices. So the question is, the current PPP delineates that 75% of the loan needs to be used for payroll within 8 weeks of disbursement. However, most of us are under stay-home orders and might not be able to utilize this funding until we can resume doing outpatient/elective ambulatory cases. How should we best manage this particular situation?
Nora, would you like to take a stab at this, please?
Sure. Thank you all so much for having me this evening. So the Paycheck Protection Program is designed to be a bridge for employees, employers, independent contractors, and as such, and I think as one of our previous speakers mentioned, it is designed to incentivize keeping people on the payroll. So as an independent contractor, you were eligible to apply for the program last Friday, April 10th, and I would encourage you to do that. And you should be able to use up to 75% of those funds for actual payroll costs and accepted payroll expenses.
Thank you very much. We have another question. Says, I'm a 1099 employee and bank with Wells Fargo, but do not have a business account with them, and they will not accept application for PPP from me. What do you suggest I do? Any other lenders I contact require pre-existing business account? Who would like to address this question, please?
I'll give it a shot, Dustin. I've worked with a number of our clients this week in assisting them gather documentation for their applications, and have heard similar things regarding Wells Fargo, that the process was slow. What I will say regarding specific banks is that those who have gone through more regional or local banks have had a faster turnaround and more face-to-face service. And to be honest, with some of those, I've actually already seen deposits come through after they've applied. So they've turned them around that quickly. Not to show preference towards one bank or another, but that local touch from regional or local banks has made a difference. And I've seen that in a couple of different localities for clients of mine.
Awesome. I've heard the same thing anecdotally, that community banks have been more responsive and kind of provided quicker turnaround to some of these clients.
Thank you. The next question said, should we expect the surgery centers to get a head start unlike the hospitals?
Bassem,
Right.
that's a great question. I think that's going to be based on what's happening in the community. Obviously, I think if there are hospitals that are, truly above capacity and trying to dig out from that, it's going to be harder for them to probably ramp up and perform elective surgeries, much as they're going to want to, because obviously I think they're going to be really looking to try and get that revenue back into, the hospital. So I think it's going to vary by market. Certainly, we know because of the efficiency of the ASC model that as long as we have the resources to, and the PPE and the equipment as we're coming out of the pandemic, I think ASCs are obviously going to be well positioned to get back to work and provide that care.
Perfect. And on that note, I wanted to share a message that we received from Dr. Beverly Phillip, who is a former past SAMBA president and the coming president, currently the president-elect of the American Society of Anesthesiologists. She said that ASA is working currently with the American College of Surgeons, AORN, as well as the American Hospital Association to develop a joint statement on roadmap for resuming elective surgery after COVID-19 pandemic. We expect it will be out in the near future. So we thank him for this effort, and we look forward to receiving that statement. The next question says, would the available funding apply to office-based anesthesiologists? Who would like to address this question, please? Nora? Office-based.
Thank you. So yes, the current funding is available to office-based anesthesiologists. Again, I would encourage you to apply. Congress is coming back into session at some point to hopefully add another $250 million to the PPP at the request of the administration. So you can apply online through the SBA website, through the slides that Julio provided, or through the ASA website as well.
Julio would like to add to that, please.
I beg your pardon?
No, that was great.
Julio, would you like to add to that?
Would I should add to that?
Private practice office-based anesthesiologists are self-employed for the most part. So which part would apply to them, and can you help them out with that, please?
Yeah, it'd be the same process as any small business trying to get the PPP loan. You'd have to get just your documentation would be slightly different than if you have employees. You don't have, your 941s and payroll tax filings that maybe another practice would have, but you should have some 1099s, and they may ask for your tax returns. Again, like the type of requirements you would need would depend on the lender, whoever's whatever they're gonna ask for. But yeah, you should certainly qualify. But as a self-employed individual, just bear in mind the max you can get would be you at the $100,000 capped income, but be sure to include your health insurance benefits and that sort of thing, because that could be included in your maximum loan amount as well.
And you do want to apply as promptly as you can, because as Nora mentioned, we are hopeful that more money is going to be provided to this. But when the money's out, the money's out. So you want to get your application into that pipeline as quickly as you can, even if it's to the point, get it in and it gets, they have to bring it back to you to get some clarification, but do get it started as promptly as you can.
Awesome.
And I will say that, if you don't mind me interrupting quick, we had someone comment in saying that they do have a business account and still can't get them to give an application. Do you have any advice for that?
It's tough because some of the loans are not particularly great deals for the bank, so they have been kind of difficult for them. At least I've heard some people have had issues with the banks because, first of all, there's a high demand, and it's hard to get through. But it's really because it's coming down to the local banks and individual banks. Sometimes the issue is not that they don't want to, they just haven't been able to get the process together. They overnight essentially were told, you're going to have to be able to process all of these loans. And then they were swamped with all of these applications without having any efficient process to handle it. So, I mean, it's very hard to tell, I think.
Thank you. We have a next question. Says, I switched, it's a long one, so bear with me, please. I switched jobs at the end of 2019, and the job I was with for 15 years had a 30% Medicare payer mix. It appears that only groups, not individuals, can apply for monies under the CARES Act. Since the requirements are that I billed for Medicare in 2019, I am eligible to collect assistance money. I wanted to know if I'm able to request my portion of the CARES assistance collected from my former group, since I was partner there from January 1st, 19 to November 1st, 19, or am I ineligible to request my portion of this assistance since I'm no longer a member of my former group?
There is some documentation on the Health and Human Services website. HHS.gov has a provider relief FAQ page, and that was, of course, published, I think, on Friday morning. At the same time, a lot of entities were seeing those deposits post in their bank account. So I'll refer to the specific language that I think is applicable to this person who's asked this question. But, they've sent out those deposits based on the TIN number that was billing those Medicare fee-for-service charges out during 2019. And as was mentioned earlier, it's based on a ratio of your TIN's amount billed out. To directly answer the question, it sounds like that it's because it's going to that TIN and you were employed by that TIN. It's probably going to be a challenge, I would speculate, to get that money back from your former employer. There are a couple of different ways that those TINs could be set up where funds could go out. If you are an employed physician, they're going to the overarching umbrella entity. If you were a solo practitioner, however, billing under your own personal TIN, then they would have come in, to whatever account was set up with that, or however the remittance was set up for Medicare. So I'm referring directly to the text on the HHS website, but I'm sure some of the other panelists may have something to add to that.
Anybody else would like to add to that, please? All right, hearing none, we'll move on to the next question, please. The question says, can we hold anesthesia billing for a certain period of time until business gets back to normal? Sharon?
You want to be mindful of filing limits. Now, some private payers, I understand, have issued notice that they are going to extend them because they understand the circumstances. So if you are going to hold your claims for whatever reason, you want to make sure that you know if that has indeed been extended so that you don't lose out for a reason like that. If, however, you have the means to get your claims out now, you probably would want to, because any cash flow coming in is cash coming in. I guess the answer would be you could if you want to, but be mindful of filing limits. If this particular payer hasn't extended, you want to make sure that you don't miss that deadline.
Awesome. Thank you. The next question is Blue Cross Blue Shield is accelerating payments and upgrading tiers in some states. Do you have a list of those states?
I do not have that list. I know some of the major payers, and I'm sure that Tim may be able to have some more information on this. Some of the major payers are starting to make announcements. United Healthcare has said they're going to make $2 billion available in accelerated payments. I think Humana is also getting ready to do something as well. Tim, do you have any other?
Well, when CMS first announced that they would accelerate payments, and then we heard from United, we started investigating with other payers. Now, what we started doing is our managed care contracting director started reaching out regionally to contacts with different payers because it varies. To be honest, when he started making those contacts last week, it was, the days are running together right now, but it was the day that United announced that they would be accelerating payments. We started reaching out to other payers, and to tell you the truth, a lot of them had not even heard that CMS was doing this yet. So, however, we have heard some feedback. I think the takeaway answer is that it's varying drastically regionally and by payer. But it sounds like more and more are coming along with that, and I think we'll probably see more of that in the next week or so.
Thank you. For all our attendees, please note that our webinar today is scheduled till 8:15. We did that to allow for ample opportunity for question and answer by our speakers and panelists. We have received more questions, so we'll move on to the next one, please. Why would someone end up going with ERA, EIRA versus PPP? I think they probably meant EIDA versus PPP.
So,
anyone would
go ahead.
Bill?
So,
yeah, come on.
I'll just start. I think that the EIDL, the Economic Injury Disaster Loans, provide up to $2 million and could be used as a supplement for some expenses. The Paycheck Protection Program, one of its most attractive attributes is that if you keep those in, if you do use it for the intended purposes, 75% at least for payroll expenses, keeping the majority, if not all, of your employees on payroll, those funds are forgiven. I mean, you've got to keep them. The agreement is that you keep those folks on payroll, either bring them back if you laid them off, or keep them on for 8 weeks. And if you can do that, those funds are forgiven. You don't need to worry about paying those back. You will have to provide documentation, of course.
Thank you. Julio? Do you have any other comments to add?
Yeah. No, that pretty much sums it up. And this is not an either or thing either. So if it comes down to the PPP loan is not enough, or you need money for other uses, then you may want to look at that other loan as well. Again, the terms are not terrible. And at times like this, when some businesses need some cash flow, it's not a bad way to go. And especially the first $10,000 advance. The plan was to get that money out pretty quickly within a few days. I think with the surge of demand, it has not turned out to be that way. But that $10,000 advance is also does not have to be paid back. Unlike the PPP loan, you will have to pick that up as income. But in a time where cash flow is very important, that $10,000 could be pretty timely.
Thank you. Next question. Can sole proprietors benefit from the student loan repayment benefit of $5,250? Is this currently available only for 2020 tax filing?
I believe it is just for the 2020. This is something we're moving forward with. For sole proprietors, I'm going to have to kind of get back to you on how that's going to work, because generally some of these programs are part of an employee, benefit package where the employers offer this benefit where they can pay these loans, where they can pay for education for an employee without the employee picking up that income. So I would have to get back to you in terms for sole proprietors if they don't have any other employees and how that would work.
Thank you. Next question. So if you are a 1099 independent contractor and you have income but do not process payroll, are you eligible for the PPP loan?
Yes, absolutely. The documentation requirements will be a little bit different, but yes, you are definitely eligible. You're just capped at the $100,000 a year. That's about it.
Would you like to add to that?
I'd just add that it's the first $100,000 of your income.
Thank you. Thanks for clarifying that. So if you make more than $100,000, you still can get access to up to the first $100,000 of your income. Appreciate you clarifying that. Is the health insurance premium cost considered in addition to the $100,000 annual income allowed when calculating the monthly payroll for an independent contractor?
Yes. They released some guidance, I think, this past week or so, where they cleared that up, that the $100,000 is just a cap for the salary, that the benefits can be on top of that.
Perfect. Thank you. The next question, are all professionals within the medical community treated equal in regards to these loans? Is there any bias towards the front lines as this term is being used frequently?
So
Not that I'm aware of.
there's no preference for frontline physicians, and that is an issue that ASA is seeking redress on with the administration. So ASA President Mary Dale Peterson actually sent a letter to Secretary Azar over the weekend advocating for some what I would consider an economic plus up that Sharon can speak to in greater detail in order to account for both the risk and the specialized skills that anesthesiologists are bringing to COVID positive patients.
Right. So, in that letter, we did discuss that. But to your point, these loans don't have that, don't make that distinction. But, there is, we are seeking recognition of that in other means as well. Another issue that has not been brought up tonight, but an option for some practices, is the accelerated advance payment option from CMS. That is not necessarily, that can be fast money. It is money that you apply for. You're eligible up to 100% of your fourth quarter 2019 Medicare payments. You fill out the form, you apply with your Medicare administrative contractor. They pledge to turn that money around in 7 days, and from what I'm hearing, are sticking pretty darn close to that. You keep the money at 120 days after you receive that payment. Medicare is going to start recouping that money back from claims that you submit during that time frame. If by 210 days out from the date of issue, there is still a remaining balance, the MAC is basically going to send you a bill. You either pay the MAC the remaining difference, and this is something that you do need to be mindful, be careful when you make these decisions. At this point, at 210 days out, if there's an outstanding balance that you can't repay, interest begins to accrue. And right now, per statute, that is 10.25%. So that's a hefty rate of interest. ASA and others are advocating to get that adjusted so that that interest rate can be lowered, if not actually eliminated, down to 0%. And we're also trying to make the case that 120 to 210 day recoupment window is a little short and a little quick for a lot of practices that may still be getting back on their feet at that time. But again, it is fast money, not that can come into your practice, which at this time, if that's what you need, it is another option that you may want to consider.
Perfect. For speakers and panelists, any additional thoughts that you want to share that was not mentioned or was not asked, or that you just thought of based on the questions that we have received that you want to share with our audience tonight, please? Open floor for the 5 speakers and panelists.
I'd like to bring up the Provider Relief Fund, the deposits that went out to most entities on Friday. And like with the PPP, I think we saw some of the answers roll out within the days after the original legislation was passed, as they published FAQs and that kind of thing. And of course, I think for most groups that I work with, it was a surprise to see that deposit post on Friday morning. We knew something was coming, but to see that come was welcome. But we've been looking at the terms and conditions which they have to attest to, and I'm curious to hear some of your feedback on those, because we have seen a couple of things that stand out. And what brought this to my mind is the last question that we received regarding frontline providers. There was a bullet point in the terms and conditions that refers to, I'll read it because I pulled it up on my other screen. Recipient certifies that the payment will only be used to prevent, prepare for, and or respond to coronavirus, and shall reimburse the recipient only for healthcare related expenses or lost revenues attributed to that. So those terms and conditions, I think, are worth looking closely at. There's that note there in that prepayment, and then there's another note in there regarding executive compensation, which caps how that money is distributed. So I recommend that groups maybe, of course, some of our panelists may want to follow up on that, but we've wanted to talk with the tax accountants familiar with each of our client entities regarding this as it comes time to sign that attestation.
Thank you.
Cass, I'd be able to just follow up on that, because that was obviously a concern that was brought to our attention when they saw those terms and conditions. And obviously, there's going to be an attestation form that anyone who gets the grant money is going to need to sign within 30 days, or they're going to be presumed to be in accordance with it. And one of the concerns was that phraseology that made it seem to you had to be caring for COVID-19 patients in order to receive the grant funding. But when you think about the other purpose for that fund, which was to deal with economic harm, it didn't quite compute. And my understanding is that HHS has, basically added another bullet point today, talking about how broadly they're considering the treating of COVID-19. And the presumption is that if you were open before the pandemic and seeing patients, you were likely seeing a patient that had COVID-19 and therefore are eligible for that grant funding. And that's really comports with really the underlying purpose of the fund, which is to get liquidity into the healthcare system and to providers as quickly as possible. And so I think if you combine those two things, I think that's the clear understanding. Yes, they could have been a little clearer, and we're hoping that the attestation form will actually be a little bit clearer in that regard, because it was confusing.
We're hearing that very same thing, and another point that kind of supports that is that was the first 30 billion that came out on Friday. And now we're working on the second tranche, where they're going to be working with specialties who don't have a lot of Medicare money, pediatrics, OBGYN, that type of thing, who presumably wouldn't be seeing a lot of, particularly COVID patients as well. So I think I would suspect that there is some wordsmithing going on at CMS right now to make the intent a bit more clear.
Perfect.
And to make that clear, that the language of the statute actually differs slightly from what was put into that terms and agreement form. And I think if they just actually mirrored the language in the statute, it would have been clearer that obviously everyone's eligible.
Perfect. Well, Bill, Nora, Sharon, Tim, and Julio, I cannot thank you enough on behalf of our membership and our attendees. It has been great, and I'm getting a lot of thank you notes and positive notes on my cell phone. So I really, really appreciate your time today. Before we close, and we're right on time, we talked about extending it to 8:15 Central, 9:15 Eastern Standard Time. And I want to give all attendees a little note about our meeting. Because of COVID, as you all know, we switched to a virtual meeting that will be held in June 6 and 7. You will get an email notification very shortly, and you can log into our website to get some more details. And also, please mark your calendar for next week's webinar. We thought this week should be on finances, since a lot of our members are suffering through the COVID-19 pandemic. But as we start to gear up for getting back to work and taking care of our patients, we thought the clinical topic would be timely next week, where we're going to learn more about COVID disease, forget about all the confusion that we get from the media or internet or social media. We want to get the facts from the experts, ICU expert intensivist, Dr. George Williams, and our national ID expert, Dr. Sharif Mossad. And we're going to please prepare questions for them, send it to us ahead of time, or during the webinar. We'll be happy to answer those for you. Thank you all for joining us tonight. It has been great. I appreciate all the information that was shared with us, and hopefully you'll find it helpful. The recording of this webinar will be posted on our website very shortly, along with Julio's slides as well in there. Thanks again, and good night, everybody. God bless. Take care.
Night.
Night. Night. Thank you.
Thank you.